What is going on with Palantir? We've got partnerships announcement every other week. Earnings was quite well, and yet the stock, if we look at the last 3 months performance, stock is down around 12%. But yeah, if we look year to date, stock is still up over 20%. At one time, it was even up over 50% year to date. Now, what has happened? I thought this thing was only supposed to go up and up and up. So why is it now down for the last 3 months? Just doesn't make much sense, right? Well, realistically speaking, we were quite stretched when it comes to valuations, right? Right now, forward PE 61.2 times, EV to sales 15.1, EV to EBITDA 45.4 times, all based on the forward metrics, the guidance, the analyst estimates for fiscal year 24, 25, 26, sales growth of, let's say, 20% on average, and then EPS growth about the same besides fiscal year 2024, it's supposed to grow 32% year over year. Now, of course, we know Palantir is a growing business, is a SaaS business, high margin, high free cash flow margin as well, but that's not always the reason why in the short term the stock will continue to go up and up and up. I mean, year over year, stock is still up 63, 64%. Quite a nice performance. Plus, the market still wants to see continued reacceleration, maybe growth over that 20% that everybody has been talking about for quite a while. Reacceleration in the government, which we have seen in the last quarter, but the market, let's say, is still skeptical. Remains to be seen. But for long-term investors, probably the best time is right now, when the market is suddenly putting Palantir on the side, focusing fully on Nvidia or some other stuff, and now finally putting Palantir on the side and letting us long-term investors accumulate at better prices, while also seeing the business become better and better. Now, I did say that one thing that did bother me a little bit last quarter, especially during the call, is the fact that they do not answer questions the way they should have done, right? The question about the boot camps, what's the success rate there? I understand why right now, it's still early on, why they don't want to show or tell us any of those numbers. But I'm still quite annoyed by the fact that there is only 2 analysts that are allowed to ask questions. There are only 2 analysts on that call. Because if you go on Palantir's website, there is a full list of analysts that are covering Palantir, and it's way more than just 2. Hopefully in the future, we're going to get more analysts on the call, which means more questions, more answers. Plus, also, this sales cycle needs to be a bit better. They're doing quite well now with bootcamps, but I think they could level it up a little bit. That's why partnerships with hyperscalers, cloud providers, and putting yourself on more and more marketplaces is definitely a big positive. Now, before we continue and look at the partnership, plus something that my alter ego / brother from another mother, Arnie, has discovered, yet again, if you like these types of videos, leave it a thumbs up, subscribe. If not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Okay, so first up, I want to start with this comparison here. I'll make a full comparison video Palantir versus Snowflake in the coming days. This was also posted on X if you follow me on that. So, Palantir versus Snowflake, shares outstanding performance, plus the stock's performance. Both have obviously diluted shareholders from the start. Palantir shares outstanding is up close to 35% since, well, the last 4 years or so. With regards to Snowflake, shares outstanding is up 21%. You might say, oh, Snowflake is doing here a better job. But if you look at the stock's performance, Palantir is up 118%, while Snowflake is down 39%. So you tell me, which stock would you rather have owned? Plus, it's true that right now Snowflake is buying back quite a lot of shares to reduce the effect of SBC, which we've seen. I mean, it's around SBC to revenue is around 40% for Snowflake. Palantir is way, way less. And to show you exactly how much less, we can go here on Coifin, link is down in the description. SBC as a percentage of revenue is now under 20%. But like I said, a full video Palantir Snowflake is coming up in the next couple of days. Let's focus back on the topic of this video. Yes, you're probably still wondering what was that $50 mark in the thumbnail. Well, you just have to wait a little bit. So first up, a partnership announcement with Proxet Group, or Proxe, a global full-service digital engineering firm serving brand name clients on the cutting edge of innovation in healthcare, life sciences, fintech, e-commerce, and Real Estate today announces its strategic partnership with Palantir Technologies, a leading builder of AI systems for the enterprise. So, we are so proud of our relationship with Palantir. We work with clients of all sizes across many industries, and the power of Palantir software is being able to give all businesses, SMB through enterprise, the same power and control over their data as their largest competitors. As for the global head of commercial at Palantir, we're excited for the continued acceleration of the Palantir developer ecosystem that this partnership represents. Proxe allows our customers to have increased choice for their development services while upholding the high quality bar our customers have come to expect from Palantir. And so the ever expanding partner ecosystem is expanding yet again. Moving on to more bootcamps and more good news. So AI Expo in Palantir Tech UK was fired. According to this post on X, over 110 businesses and IT leaders across plus 80 organizations heard from customers driving impact with AIP, and every one of them built LLM-enabled apps today. Don't wait, build. Palantir is made for builders. Of course, again, with bootcamps, with all of that, the conversion rate is yet unknown. Then going back to the aspect of cloud partners, hyperscaler partnership, marketplaces, etc., we've also talked about Palantir for the individual, right? We've talked about that with Arnie on this channel a while ago. So Rocketman on X has asked this question. This might be a silly question, but is it possible to take the Palantir's KLLM technology or philosophy and turn that into an actual Palantir app and release it to individuals? Because if you can, then I would definitely pay to use it. Twitch chat, great guy, great follow on X. Also, if you want to learn more on how to use Foundry and stuff like that, go and check out their YouTube channel. He does a great job at presenting. So he answered here, great question, and I want to use this question also to make an important point. Yes, we could do something like this, but there is nothing stopping you or anyone else for signing up and building this for yourself in AIP without us building it for you. That's the whole thing here, right? They give you everything you need to build the stuff you want. Of course, they could do it, but then they will have to focus their attention on something else right now, something that a user itself should be able or could be able to do without Palantir's help. That's the whole thing. Palantir is made for builders. They want you to build using their tools. Of course, you will have to learn. There's a lot of learning materials online, lots of people that are willing to help you as well at Palantir that are using Palantir Foundry, etc. So that's also how you expand the whole ecosystem, the whole solutions, apps, partners, etc. So when it comes to the individual app, first of all, I'm going to ask you, the viewer here, what would you use a Palantir individual app in your day-to-day life? If you've got any ideas, let me know down in the comment section below. And if you think that idea is feasible, why not try it out to build it yourself, right? And now, talking about the thumbnail, the topic of the video. So, Arnie found out here in their 10Q something interesting, which was to stock options and SARs. So, to me, to summarize this, this is basically performance-based compensation or performance-based rewards. What does that mean? Well, as of March 31st, 2024, the total unrecognized stock-based compensation expense related to options and SARs outstanding was $573.7 million and $137.9 million, respectively, which is expected to be recognized over a weighted average service period of 7 years and 5 years, respectively. During that same period, the company granted SARs that vest upon the achievement of a market-based vesting condition subject to continued service. The market-based vesting condition is satisfied when the price per share of the company's Class A common stock exceeds $50, measured based on the closing price on the immediately prior trading day and above price day. Following vesting, SARs may only be exercised on an above price day, which occurs within an opening trading window. The maximum appreciation is up to $20 per SAR. So to simplify all of that, Arnie is going to explain it, but I'm going to read that. By the way, go follow him on X and go follow his Palantir newsletter if you have not. Link will be down in the description. So, Palantir's new SBC package. The stock needs to exceed $50. In the latest Q1 results, there is a tiny crucial detail. You let me know in the comments. Palantir granted around $44 million stock appreciation rights, or SARs, to employees. So how does this work? SARs are a way to incentivize employees by giving them the right to receive in cash the difference between the stock price and the target if certain conditions are met. The goal is to align employees with shareholders. The details. $50 price target, 5 years of continued service, $20 max appreciation per SAR. In simple terms, employees will be entitled at the end of 5 consecutive years at the company to benefit from the difference between the stock price and $50 with a cap of $20 per SAR. So for instance, it gives us here a couple of scenarios. If in 2029 the stock is $30, get 0. $50, SARs will be worth 0. If it's $60, each employee gets $10 per SAR. If it's $80, you get $20 per SAR. If it's $100, you still get that $20 because there is a cap of $20 per SAR. So with SARs, employees receive typically cash equal to the difference between the stock price and the target. SARs are a way to incentivize employees by aligning them to the performance of the business, the stock, while not issuing further shares. Differently from options execution, there is no issuance of new shares and no cash out from employees. Assuming that all employees received some SARs, if the stock exceeds $70 in 2029, each employee will receive an average of $240,000. This is on top of the regular share employees vest during their time at the company in the form of RSUs. This is a massive shift in stock-based compensation. Currently, there are 74 million RSUs outstanding and 44 million SARs all granted in Q1. So we can have the intuition, 1/3 of the SBC is now pegged to the success of AIP. No performance, no reward. And yes, do SARs correctly incentivize employees? My opinion, 100%. We've been hearing about this a lot recently, or maybe not a lot, but more and more about performance-based rewards for employees, which in my opinion makes a lot of sense. Great for the company, great for the employees, unless you don't want to work there. So, of course, the success. And so right now, as the stock still stays around $20, $21 or so, the more we stay around those prices, the closer we will get to the 200-day moving average, which still sits at $19.40. We are currently under the 50 and the 20-day moving average, which sits at $22.13 and $21.87. RSI still pretty neutral. Overall, the closer we get here to that squeeze, which might or might happen closer to the next earnings report, the bigger the outbreak will be. Of course, the most important here is how the business is performing. Suddenly we continue to have a reacceleration, then let the party start. But overall, Palantir is doing quite well. When will we reach $50? I don't know, but now there is a right incentive for everyone there. Accelerate sales, make the business successful, you will get rewarded handsomely. Shareholders will get rewarded handsomely as well. So we're now back under $50 billion in market cap. Long-term future of this company, in my opinion, is still pretty rosy, unless you disagree. So let me know in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.